Good morning. Yes, July is upon us already. It's Monday the 4th. Happy Independence Day to our friends over in the US. And welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards and give our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today in Germany with an update on their trade balance. On Tuesday, it's interest rate decision day in Australia, and we'll give our thoughts on the likely outcomes straight after this. Also, Tuesday brings updates on global services PMIs and US factory orders. Wednesday brings us updates on retail sales in the Eurozone. We'll also get the latest quarterly growth forecast from the European Commission, and we'll talk about that in more detail shortly. And the latest ECB minutes are released, as well as US ISM services PMIs. And finally, Wednesday sees the release of the minutes from the Fed's last meeting, which may shed some light on the interesting pivotal standpoint in the last rate decision. And again, we'll give our thoughts on this afterwards. On Thursday, we'll get the latest US ADP payrolls and the US initial jobless claims. And finally, Friday sees the release of the latest US NonFarm Payrolls and the unemployment status in Canada, and both of which we'll give our thoughts on afterwards. And the companies that we'll hear updates from this week are as follows. On Tuesday, Sainsbury released their Q1 trading update. Now, in an already deeply competitive market and with inflation breaking new records, how is this supermarket faring? Well, we'll give our thoughts on this in a moment. And talking of the cost of living crisis, electrical retailer Currys are due to release their full year results on Thursday. And house builder Persimmon is also due to release a trading update the same day, and we'll talk about both of these economic bellwethers in a moment. Also on Thursday, we'll hear from Jet2, Entain and Levi. And finally on Friday, we'll hear from Vistry. Well, central bankers were in focus last week as Jerome Powell, Christine Lagarde and Andrew Bailey spoke at the ECB forum. Now, they made it clear that they were serious about bringing inflation lower, even at the cost of entering a recession. Well, the Reserve Bank of Australia meets on Thursday. Will they be sending out the same message? And with minutes from the FOMC and the ECB both being released this week, we may get a clearer insight into the major central banks' current policies, particularly in relation to inflation and the ongoing fears of recession. So let's take a look at this week's key stories in detail. Well, Tuesday is interest rate decision day in Australia. Now, the Reserve Bank of Australia caught the market by surprise in the last meeting by raising interest rates by 50 basis points to 0.85%. And this came after a 25 basis point hike in May. Rates are rising. The only question is, how fast will they keep rising? Given that there hasn't been any inflation data since the last meeting, the RBA is unlikely to opt for a 75 basis point hike, leaving 25 or 50 as the options, with the latter the most likely, given how far the RBA needs to go to get rates neutral. The Aussie dollar came under pressure last week as gold prices tumbled as risk-off dominated. A hawkish outlook from the RBA could help the Aussie recover. And also on Tuesday, UK supermarket Sainsbury is due to release a Q1 trading update. Expectations are pretty low. The industry is attempting to keep prices low for shoppers as food inflation shoots higher, and at a time when supply chain disruptions and labour shortages remain as prevailing headwinds. Price will become increasingly more critical as the cost of living crisis ramps up, with low-cost Aldi and Lidl a serious source of competition. Consumers are already changing their habits, preferring own brand or frozen foods. Sainsbury expected to report a 7.4% decline in like-for-like sales, driven by a 3.1% fall in food, 8.7% decline in clothing, and a 13.5% drop in general merchandise. Will Sainsbury be able to maintain its full-year pre-tax profit guidance? That was $630 million to $690 million. We'll see. The European Commission is due to release its quarterly economic growth forecast on Wednesday, and the picture is unlikely to be pretty. In the spring projection, the EC forecasted slower growth and higher inflation amidst the ongoing fallout from the Russian invasion and global supply chain disruptions. Forecasts were for GDP growth of 2.7% this year and inflation of 6.1%. The outlook for the EU is expected to deteriorate further, with slower growth and higher inflation. Wednesday also sees the release of the minutes of the Fed's June monetary policy meeting, which could shed more light on policymakers pivoting to a more aggressive interest rate stance. Well, with inflation at 8.6% year-on-year in May, the Fed hiked rates by 75 basis points, a larger than forecast hike. With just one policymaker voting for a 50-point hike and the rest voting for a 75 basis point hike, the market will be keen to hear why the Fed suddenly changed its mind and what this means for future hikes. On Thursday, Currys are due to release full-year results. Well, a surge in demand for electrical appliances during the pandemic boosted the sales at Currys. However, now the retailer is facing a slowdown as consumers rein in their spending amidst fears of a recession. Expectations are for a 5% fall in annual revenue to £9.83 billion and a 2% fall in adjusted pre-tax profit to £152.9 million, which is below the target £155 million guided for in January, as supply chain disruptions added to costs and, of course, the chip shortage hit the availability of some products. Investors will be hoping that strength in the overseas arm will offset weaknesses in the UK business. Shares currently trade around a 2-year low as sentiment towards the sector remains low. Big ticket items are often the first to fall when consumers start reining in their spending. Persimmon are also due to release a trading update on Thursday. House builders have been out of favour despite ongoing strong demand for new homes and house prices rising 10% a year, according to the latest Rightmove figures. Persimmon trades around 30% lower this year after comments that H1 forward sales would be weaker, with a rise expected in the year's second half. The firm is expected to have built around 7,075 houses in H1, that's down from 7,406 the previous year. Although average selling prices are expected to have risen, sales volumes are expected to have fallen, pulling revenues 1.8% lower to £1.81 billion. Forward sales will be under the spotlight as the market looks to see how the firm is holding up as mortgage rates rise and consumers, of course, rein in their spending. It's US non-farm payroll day on Friday, and despite rising fears over a recession in the US, the labour market has proved to be very resilient. In May, 390,000 jobs were added to the US economy, which actually was significantly ahead of the 325,000 forecast. And the unemployment rate held steady at 3.6%. Now in June, companies are expected to have kept on hiring, but at a slower pace. The ADP payroll rose by 128,000 in May, and that's the weakest increase since December 2020 and down considerably from the downwardly revised 202,000 ADP payrolls in April. Well, the ADP is actually considered a lead indicator for the NFP. Expectations are for 250,000 new jobs to have been added. And while this is still a substantial number, it would be the third straight month of falling payrolls. The number of vacancies remains high and wages are rising. The question is whether higher wages and the rising cost of living will draw people back to the labour market. So we also get an update on Canada's job market on Friday, and like the US, the Canadian jobs market remains extremely tight. Vacancies rose to around 1 million in April, and that's up 44% from the previous year. Employment rose by 39,500 in May, ahead of the 30,000 forecast and up firmly from April's gain of 15,300. The problem that Canada is facing isn't falling demand, but of course a shortage of workers available. With unemployment at its lowest level in over 25 years, additional demand for labour could start showing up in wage growth. And those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due this week. In the FTSE 100, we'll hear from Next, BATS, JD Sports, Aveva and Coca-Cola HBC. And in the FTSE 250, we'll hear from Murray International, ICG Enterprise Trust, Big Yellow Group, Workspace, Sirius, Paragon Banking Group, SafeStore Holdings and Primary Health Properties. So there you have it, different week, same old worries. It's all interest rates and inflation once again. But don't worry, we're here as always each week to guide you safely through the economic slings and arrows of outrageous fortune. So as always, thanks for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, of course, if you haven't tried it already, don't forget that you can download our app to your phone or tablet if you do want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.